So welcome to Agribusiness Matters. My name is Venki Ramachandran. Agribusiness Matters is an endeavor to discover systems thinking in food and agriculture in an age of runaway climate change. Today is a very special day. I really didn't plan this, but I guess some of the coincidences are the most memorable and the beautiful ones. Today happens to be the death anniversary of Dr. Kurian. And frankly, by an act of serendipity, it is so happening that we are gathering today on this topic to talk about making FPOs and investable assets. Before I really set the ball rolling, I'll just maybe take about 5-10 minutes just to set the context, so that we then kind of invite the guests in, and I think Emmanuel is also just driving back to his office, so I don't want to make it difficult for him to chime in. So I'll just set the context and set the ball rolling while the guests also settle in and get comfortable. Yeah. So I hope you're able to see my screen. I just made a very small presentation just to set the context and as to why this theme really emerged the way it emerged, and what we plan to discuss in today's conversation. First of all, thank you very, very much to all the guests, Rahul, Shambhu, Emmanuel, and also a few guests from the Managing Sustainable Transitions community, which I also happen to be a part of. I think a lot of folks from that community have joined in there. This has been a session that's long been in waiting in there, and I'm so glad we could make this year. Before I really start off, yes, we didn't really plan this, but today happens to be the death anniversary of Dr. Kurian, and it's a very special day. I think in many ways, his vision and his aspiration still remains unfinished. So that also brings in a certain sense of urgency in terms of what we are striving to do. Just a bit of introduction and background about me and why I do what I do. So my name is Venki Ramachandran. I pretty much started off as an average techie from a consulting background and worked in agri-tech firms until 2019. I used to work in few tech firms. And in 2019 or so, I started this company called Agribusiness Matters. The idea was, can we, if you know this, a beautiful little creature, this is the beaver. Beaver creates these lovely little ponds in various wetland regions, and those ponds then turn out to create have a lot of ecological capacities, and they create a lot of ecological structures that foster cooperation and collaboration. So with a very naive or probably a romantic thesis of can we build these kind of ecosystemic structures, I started this journey in 2019. It's taken about 5 years now. The idea of Agribusiness Matters as a venture is to create these structures where various players can come together, be it from the public kind of problem solving sector, be it from the private problem solving sector. We deal with a variety of players in the agri-tech ecosystem. And given the overarching theme of systems thinking, it kind of makes sense for us to kind of focus on various themes there. So that's a bit of a background about who I am and what I do. So today, actually the thesis, the genesis for this conversation actually started off with one of my very informal conversation with a venture investor, and where I was talking, because today the sort of a grapevine is that while there is enough cash and capital at an institution level, there are not much of funding there's not much of companies that are worth funding in. That seems to be the prevailing mood, in some of the conversations I have with investors. And so I started asking casually to few investors that, if this is the case, why not redirect the funds to the FPOs? And today we are also in a very a strange sort of market environment, where the distinction between public capital and private capital is increasingly getting blurred. For a long period of time, people in the private capital would always frown upon public capital because they would see them as wasteful expenditure that is focused only on subsidies. But today, especially with the ascent of digital public infrastructure, with the ascent of the way the climate change is forcing us to rethink our responses. Today, the distinction between what a public capital and what a private capital actually the distinction is a bit blurring there. Even you can see this even in terms of the players there. And that's why I created this meme some time back, where today you talk about some of the leading private players, the way they talk, you are not really sure, are they CSOs or are they for-profit firms? And likewise, you see some of the for-profit players and the way they talk about the way they do their business, you're not really sure if they are CSOs or they are for-profit firms. So in this context is where this kind of topic really emerged in terms of making FPOs and investable assets here. This is from a very interesting study done by this company called ClarityX from a company called MapMyIndia, which presented a very unique set of report on India's district potential index. I'll share the report also with people with folks here. It's an interesting study that looked at how some of the spatial data with respect to India's growth, and based on the spatial data, they started collecting data specifically to the 788 districts of India. And some of the interesting data points that I really found interesting in terms of from this study is about 60% of households live in the top 20% of the districts out of the 788 districts. The luminosity factor is a very fraught phenomenon. I know many of the academics and scholars have debated and challenged that somewhat naive view in terms of how luminosity affects the extent as a marker for growth. But nevertheless, there has been some data that shows the luminosity has increased. And of course, there are some improvements in terms of healthcare infrastructure also. As expected in some regions, the West region has seen a good chunk of growth, and we also see a good chunk of growth in the southern regions there. Among the central eastern regions, Jharkhand, Tripura are some of the growing regions. And then, of course, some of the conventional systems is what we see in in terms of the data that we have for Punjab, UP, and Himachal Pradesh. This is a very informal environment, so sorry if I'm sounding a little too informal in this space. The idea is to create a very a sort of a personal space where we can get to really talk about things that really matter. So when I was trying to categorize how cooperatives have evolved, I couldn't think of keeping Amitabh Bachchan as the motive in terms of how this sector has evolved over time, right? The idea of cooperatives is obviously more than 100 years old. And we all know the levels of evolution in which it has progressed in. And when I really look at until 1980s, I was doing some bit of research on the evolution and the history, and I really found it interesting that there were almost 3 phases in which you can map the evolution. At first stage is what we see as the cooperatives, which is until the 80s, which is led by a lot of selfless Gandhians. One of the very much excited reasons for me to bring in Shambhuji was to this conversation is also the fact that he was from IIT Madras and he spent a lot of time with Dharampalji, I'm presuming. So that was also Dharampalji has been a big inspiration for me in some of the work that I do. So that's one of the excitements for me to have him in this conversation here. And of course, from there, from that phase of like as in Shambhu's excellent book here, he talks about how the patidars and and some of these traditional leader communities led the evolution of cooperatives. They took the mantle of the leadership, right? And from there, we move on to the second phase, which is after liberalization, where there was a stronger emphasis to integrate with markets. And this is where PK Alag, he passed away recently. He famously wrote about in one of his early papers, he wrote about, can we bring together cooperative spirit with corporate efficiency? And this became, and when he included the Part 9A in the Corporation Act in 1956, I think he added an amendment to it, and that's where producer companies there. I'm being a little bit also nervous talking about some of these things in front of eminent scholars here, but pardon my childish naivete in just giving through a very quick walkthrough here. From the second phase, I think we move on to the third phase when Ministry of Corporation began. This is also the phase where now in 21, I think there was a gazette notification, Sahaka Se Samriddhi became a sort of a phenomenon and coinage by Amit Shah ji, and I think they started the Ministry of Corporation, and now Sunita Narayan has recently written this book called The Rise of the New Locals. Today, especially with climate change and the kind of volatility we are seeing with food security, a lot of countries are beginning to prioritize Atmanirbhar. They are looking to focus on their own strategic capitalism. And so we see this sort of third phase where when I look at the third phase, I kind of see all of them together in some sense. The third phase focusing on the PACS and digitizing them. And we've been seeing the growth of simultaneously the common service CSCs, which also been growing in this country. CSCs have sort of evolved over time into to setting up a common service centers, for setting up a lot of village level service centers. So there is always this challenge with respect to how do we address this development, agri-tech development death cycle. So this plays out in terms of a feudal choke points. Again, nothing new for all of this audience here, where we see the three parts of the choke point from input, output, and local money lenders. So when we look at this problem statement, I'm breaking it down into three parts, which is in terms of access to capital, access to markets, and access to technology. We made some progress with respect to some parts, but of course there is a lot needs to be explored in each of the remaining parts. So I asked the AI to make a model of how farmer FPO financing and making FPO investable assets. Actually, Claude made this interesting model, which is a very good marker of how well the collective knowledge has evolved. And this is the top one is from the Claude's model. The below is from how this is from a very recent report that talks about different stages of funding and financing here. So there have been attempts in terms of setting up these models in place. This is the BOTT model, which we are largely seeing for federated FPOs. This we are seeing, and even for the Maha FPC and few others, which Shambhu Prasad has quoted in his book, there have been certain ways where some of these have been elaborated in detail. So, and in from a scholarly research, there has been a lot of distinction now in terms of type 1 and type 2 FPOs, where the type 1s are the ones that are aggregating at an input and output, whereas the type 2 is where the federations come into play, and we are talking about a multi-layer relationships. So to discuss this very fairly complex topic, we have a very exciting panel. Rahul, he's from the Harvard Business School, and he is also one of the founding member team of Rabobank's Food and Agriculture focused private equity business. He was also, of course, he's invested in Sahyadri, and we are going to talk about some of his, the thesis with Sahyadri. And of course, Emmanuel is, I call him the Bhishma Pitamaha in this space, who's been very active and is constantly exploring the newer technologies, always very active and enthusiastic when it comes to talking about FPOs. He is also independent director for the NAP Kisan Finance Private Limited, which we will also, I think, has a huge role to play in this context here. And of course, Shambhu Prasad ji, I am very delighted to have you, sir. I included this first part, mechanical engineer, because I'm also a mechanical engineer who ventured into this, and I was so very delighted when I saw your background as a mechanical engineer. Of course, he is also, he has been spanning a lot of work and creating a lot of newer knowledge repositories on dealing with this topic there. So with that, there's a very popular analogy in India, in Mahabharata, where this person is chased by elephant, and he goes and jumps into he without he doesn't know how to manage this elephant, and he jumps onto this tree, and he is about to fall down because he sees that the rats are nibbling in, and while he is holding on to the last edge of perch, we still see snakes at the bottom. This is a very common myth and allegory that was used in Mahabharata to talk about humans' condition. But when I look at all the challenges we talked about with respect to how FPOs have come in and how cooperators are moving in, and the kind of challenges we see in different stages of financing, I think it's a good sort of a metaphor to really start off with to see where we are. I'll stop from here, my ranting here, and I have a much better guest there. So I'll open the floor. I'll introduce or bring in all the floor, the panelists to the podium here. One sec. Great. So I'll first start off with with maybe Rahul here. Rahul, when today you come from the Rabobank's and history, which has also been sort of funding in the Rabobank Foundation, has sort of done a lot of pioneering work in Credit Foundation there. So can you maybe start off with, I really want to start off with, before we're talking about theory and aspects of ideas and policy more, I want to start off from a ground reality of what has been the progress we've made. And that's where I thought maybe I'll start off with you. Could you share what was like when you first looked at Sahyadri, and when the initial discussion was there in terms of for you to evaluate, what was the thought process for you like? And typically, one of the distinctions when we talk about farmer producer organization is the distinction between, where you just not focus only on the return and the exit, but you focus on also the larger impact story. So how do you reconcile this from an investor's perspective, from an operational reality, right? So from that sense, could you maybe share some of your perspectives and we'll set the ball rolling?
Great. Thank you, Venki. Firstly, delighted to be here and also uh, learn from, the eminent panelists that you have managed to attract. I by no means am an expert in the FPO space. So I'm really looking forward to hearing from Emmanuel and Dr. Shambhu and of course yourself. Uh, so on Sahyadri and how we invested, I think I'll just give you a bit of the backstory first
Sure.
and then come to the ultimate sense of what eventually transpired. Uh, so firstly, I was always somewhat comfortable in the investing in the FPOs, that cooperative type of a structure. Rabobank also, as you may be aware, is a cooperative bank, owned by Dutch farmers. And I've also worked quite closely with IFCO in some of the investments that we made at Rabobank, a company called NCMSL, which is in the warehousing space. And also looked at the crypto model. And what was kind of common there was that all these entities had subsidiaries which were private companies, and they had partnered with institutions, fairly well-known institutions, to build out that part of the business, whatever it may be. So IFCO, for example, has uh, a joint venture with Mitsubishi in the agri input side. It has another joint venture in plant growth regulator. There's this brand called Sagarika. It's a 50-50 JV. Um, and of course, Rabobank has several other entities in wealth management, asset management, leasing, and what have you. And FPO, the evolution that you showed, I saw it as uh, another variant of cooperative in that sense. So a lot of private investors you speak to and who we still speak to, they are somewhat wary of figuring out, what is this animal, and is it actually investable, and what are the pitfalls, what are the regulatory challenges, what are the enforcement challenges when it comes to your rights as an investor. And I thought, it's still a lot of fear of the unknown. And if you really get down to it, uh, there are a few peculiarities, but by and large, it's business as usual. Um, so when it comes to Sahyadri, the current fund from which we're investing. So Rabobank, as I did that for about 12 years, left that 5 years back for another impact investment firm from Belgium called Incofin. Incofin is a global impact investment manager, focusing on cover two themes: financial inclusion and food and agriculture. Um, and in different countries, we have different products. So like in Latin America, for example, we have a fund which works with smallholder farmers and getting them aggregated into their uh, version of a farmer producer organization. So basically creating a formal structure, getting them a fair trade certification or organic certification, and then linking them to buyers of that produce. So that's a specific objective of that fund. In India, it's been more equity for the last 15 years now in the financial inclusion space. And when I joined 5 years back, we added on um, food and agri investing also. We typically invest at the growth stage. So we're not a VC investor, we're not a technology investor. For us, the risk that we're willing to take is execution risk. So whenever we see a company, and this means different things in different sectors of agribusiness, whenever we see a company is at a stage that we would be taking execution risk, we would be happy to take a deeper look at that. It does not necessarily mean that the company is profitable, but really the product market fit is in place, and reaching profitability is ultimately a matter of scaling that particular option, not of figuring out, hey, is somebody going to buy this, or what should be the right price for it, and stuff like that. Sahyadri, so it came in from a top-down kind of an approach. Uh, we were quite keen to invest in the horticulture space. It's one of the few segments where which has already increased on a per capita consumption basis in the 1980s to now, and it followed a very typical trajectory as per capita incomes increase. So your cereals go down, your proteins and fruits and vegetables, they go up, and then there's the whole export angle also. So that was the commercial lens that we were looking at when we set up the current fund from which we're investing. And when we started looking at the horticulture sector in particular, we found the companies which would typically come at a Series A type of a stage for for their first institutional check, they were hugely loss making. And I'm talking about 2020-21 vintage, which was also really the go-go days of the agri-tech industry, where everything sells. And you had some fairly exotic models, which typically, in more senior times, would not be really entertained by anybody, including the founders, in terms of their own mind space. So horticulture, was a difficult space, and in the best of times, horticulture is an expensive supply chain to build out, with its own peculiar challenges. So we kind of inverted the pyramid that, okay, what would the end state look like in the sector? Okay, let's say we go through the grind of investing in a company and backing it for 5 years, 7 years, 10 years. What is the best case outcome? So let's look at, the winners from the sector. And it was in that study that Sahyadri came, on our radar, that okay, here is a company which is 1,000 crores, and if you invest in a company which is 50 crores, maybe in 5 to 10 years time, that'll be an end game. So we looked at Jain irrigation, Jain Farm Fresh, Sahyadri, a couple of other models, and we actually reached out to them just from a market study perspective, and they were kind enough to entertain us. This was even before we had a fund, so it was really an academic exercise, in that sense. And we got talking, and we saw, we had, some shared strategies in terms of how we see the sector playing out, and we built a rapport. Following that, we said, okay, this company actually has not attracted any capital so far, primarily because it was a FPO, and they've grown organically, bootstrapped, and profitably. So is there a way that we could invest here? And that's when we started figuring out, how to do this. A typical approach which was first thought about, and which also you see a lot of FPOs have, is that, set up a new company, a private limited company, and attract capital there. And in the context of Sahyadri, we saw that as suboptimal because they'd already reached a certain scale. They had production assets, they had customers, and then how do you get conflict of interest policies in place? So we tried to figure out if we could invest and be part of those assets themselves. So we went through a restructuring process in which all the assets, contracts, employees, etc., they were sold through a slump sale and into a subsidiary. And this was done through the NCLT process. It was quite a challenge because this was done during COVID, and courts are all virtual. So it was quite a challenge from a organizational perspective. It took almost 18 months to come get by. But that's now created a entity which is investable and is capable of attracting third-party capital. So the FPO becomes a holding company. There are certain certain activities that are left at the FPO level, so which are typically around farmer organization and backend creation. So there is the institute which is set up in collaboration with Tata. So it's the Tata Strive Institute, which is for skill development and also creating more FPOs. So they act as a feedstock for more FPOs joining the Sahyadri ecosystem, and also for other programs. So I think this Tata Strive Institute, they've trained almost 1,000 FPOs in the last 2 years. From a leadership development perspective. And things like the input business and loans for farmers, financial inclusion. So all of that remain at the FPO level. And then the more commercial activities, they are in the subsidiary business. What's been quite important for us has been the elements around transparency with the farmers. So a few things we thought the company did really well, which gave us comfort, and also I think gave comfort to the farmers in this entire transaction. One, the farmers were completely aware about the entire transaction, and this is something I really like, is that if you go to the AGM of the Sahyadri Farmer Producer Company, there is a detailed presentation that is made to the farmers, and people ask questions. And it is as detailed a presentation as would be made to any investor or a board of directors. In the run-up to our investment, we were also interviewed by a board of farmers who asked very relevant questions. What value add will you do? What is your experience in the past?
Wow.
What are the investments you have done? What has been, your value add there? And they continue to ask if you visit farmers now. So I find them to be a fairly enlightened set of people in that sense, and very involved. And the second thing which gives us a lot of comfort where things go wrong is the whole process around the pricing for a farmer coming into an FPO and farmer looking to get out of an FPO. That's led to a lot of heartburn in the past. So how transparently is that mechanism documented and implemented? So they already had a process in place. We put some more guardrails around that, and I think that also gives a lot of comfort to the farmers on the fact that their wealth creation journey that will continue unhindered.
Fascinating.
I'll stop here, but happy to chat more on any of these aspects that you'd like me to go deeper.
Sure. I mean, I want to maybe ask a follow-up to this because it's a common thing that gets typically asked whenever people quote an example of Sahyadri. Because there is a common sense that it's an outlier, right? And because of the holding company structure that you say, right? So typically, whenever you bring up this topic and you talk about Sahyadri as a model, there is a sense of this holding company as a structure which sort of makes it a sort of a unique outlier in this ecosystem there. Would you agree with that evaluation, and if so, what ways can some of this structure do you think is necessary for the rest of the ecosystem to learn?
So there are a couple of things there. One, see, what is important for attracting third-party capital? That as a minority investor, you want all potential conflicts of interest to be closed out. Now, if there is a significant commercial activity which overlaps with the activity that you intend to do in a subsidiary type of a structure, then that is a significant conflict of interest. Now, you could start off with a situation where the company is entering a new line of business. Then you do not need to subsidize the existing business. You can start with a fresh company. You're starting a new FPO for a certain process, and the FPO has been set up and they want to enter into commercial activity. They start a private company and proceed. But in this type of a specific situation, which also I think would be an outlier because there are not so many scaled FPOs to begin with, right? You would need to figure out a construct similar to this.
Mm.
Otherwise, you would always have challenges in your fundraising journey. So Sahyadri too, we ideated on this aspect for quite a while, that, and we actually did set up another subsidiary which was for domestic business for supply chain.
Mm.
And we thought, okay, maybe let's leave the export and the food processing, which is the B2B food processing, which is the work, that they do for
This is what they mastered
Coca-Cola
in
and
largely at large.
yeah, that we leave that out of the picture. And we build out a more B2B2C type of a domestic distribution strategy, and just invest in that. And we thought that, we will always struggle to answer subsequent round investors, and also be comfortable ourselves that that everything is kosher, and we try to put guardrail around, hey, you get access to information, this, that. It's suboptimal. So let's just bite the bullet. Let's start on a clean structure.
Understood.
And that was kind of what we did ultimately.
Okay, nice. Thank you. I'll move on to Emmanuel here. Emmanuel, you've seen it from the early days. I looked at your earliest 2008 paper where you talked about idea of producer organizations, and it's very fascinating to see how your perspectives were from that age to now in terms of when I see your recent output. Uh, you know, I was looking at I think Pravesh Sharma's recent one of the presentations in NFPO, where he was talking about that some of the earlier experiences with the government with respect to our cooperatives shaped certain sense the response to the next phase with respect to producer companies, in terms of with respect to ring fencing, private equity directly investing in FPOs, and some of the fund, some of the guardrails that were put, and which is what I think Rahul was also alluding to in some sense, in terms of which necessitated creating a new structure, right? So when you look at the current ecosystem here, how do you objectively look at to what extent have we been able to put guardrails for the sake of, because we are talking about entirely a kind of a different concept of organization, so there has to be some sense of guardrails, but have we gone too far ahead in keeping these that have thwarted the growth? How do you sort of do the evaluation trade-off, Manuel?
Yeah, I think restricting share capital contribution only to farmer members has limited the capital structure of FPOs, especially those which have a potential to scale quickly. And that has still not been resolved or addressed. Unfortunately, I think even the legislation doesn't have provision for subordinate debt, preference capital, and other kinds of equity structures. So how do we solve that is a question. And I think the earliest transaction which happened in this space was Rang Sutra, where a private equity investor came into this FPO by not a subsidiary, by a forward establishment. So you created a marketing entity, and then that became the face of the organization, and the FPO became a producer company in a sense. So the challenge in that is of creating value and transferring value to the primary producer. So does that remain intact is the core question. Now, in that particular case, I think the producer company became a shell company in essence. And the second question was about exit. So when it is time for an investor to exit, who will buy out the investor's stake, right? And when that becomes a struggle, again, the investor does his loops and tries to do all kinds of things. So those are the questions. Capital, attracting capital to FPOs is critical, no doubt. We'll have to open it up to private equity, but keep the cooperative principles intact. right? So those cooperative principles, one man, one vote, and participating, free entry and free exit, a fair share of, or let's say the proportionate to the turnover that the producer gives to the business. So all those principles have to be retained, and that becomes a bit difficult. So we will have to, I think, every transaction will have to be creatively structured and deeply engaged, and by somebody who is serious about this business, so who doesn't see it as a short-term opportunity. And because these are very complex structures to create, probably partnerships are the way forward. So every FPO need not become a MNC. It could still remain a member of another entity, which does things which an FPO has limitations in doing. So that could be one way to grow. This is very early days, of course, and with the company like Chetna, where I'm involved, which is a cotton producer company, had reaching turnovers of 50 crores. These kinds of struggles remain. Where do we raise equity? From whom do we raise? What's the future plans? What are the growth plans? So, building very large producer institutions is going to be a long-term thing only. So they need not always be large. You could always be small and participate with others who can give you all those market access and other things and give you the value return to the farmers. So, and these can be sustainable partnerships, relationships built on trust and for the long term. So several models will evolve. But on the capital structure, there's need for, I think, change so as to be able to enable private capital to flow into FPOs.
Yeah, I mean, at one level, when I really break this down in terms of capital, right? While we have not done well in the equity side, I think from the debt side, we seem to have progressed some bit of further. That seems to be like the sense right now. That of course the interest rates are high, and we still haven't sort of moved into better ways of addressing that. But would you sort of agree with that assessment in terms of you've done better in debt when compared? I know you're in the debt, but I'm still asking this question.
I don't think the products, the structures, none of these are well designed, appropriate for FPO businesses. So there's a need for a lot of innovation in that space, including the so-called guarantees are very hypothetical, really not backing the loans that are given to FPOs. The risks are immense in this business, and lenders are doing safe lending to a large extent, which will be inadequate in most ways. So if a startup, is burning cash like mad and still is investable, why an FPO which has a marginal loss is not debt fundable? It's a question. So the only profit-making FPOs are get debt funding. So even conventional finance metrics are not appropriate for funding FPOs.
Great, which is actually brings me to Shambhu. So Shambhu, in your book, your book. By the way, I also want to shamelessly promote your book to this whole group here. It's an excellent book, Farming Futures: Reimagining Producer Organization in India. The book really threw up a lot of insights, and actually it's an entire masterclass in itself. But I want to maybe focus on some of the core aspects that you talk about in your book, which is you talk about some of the, like while, when I hear both Rahul and what Emmanuel is saying in terms of, we have not even designed the right set of metrics to even measure the performance, right? So as a scholar and who is looking at it, and you've been also going back to some of the seminal principles. I mean, I was very intrigued to learn about Tushar Shah's Anand pattern principles, where you highlighted some of the fundamental levers that have to be put in place. So when you are looking at in this kind of a ground up where we have to even design the right set of metrics to track, how do you track, the progress we made so far in this there? Because in your book, you have the 15 examples. The successful one seems to be the federated one there. But from these and from your extensive study there, are you seeing some sort of clear patterns of how this kind of way to, even rethink from the fundamental principles wise, are they being addressed? How are you seeing that, sir?
So thanks, Venki, for organizing this on Korean's death anniversary. So it's actually a right time to think this legacy in today's times, and we need to rethink. This is what we tried during the Korean centenary celebration. So rethinking Koreans' understanding of farmers in contemporary times. So just to take this kind of insight. Just sorry for this distraction. It's asking me whether I'm speaking in Hindi. So
no, you can turn it off the caption. Yeah.
Yeah. So one of the things that we were trying to figure out in the book is, if we take a reasonably larger sample of, say, 15 FPOs with 3 federations and so on, are we able to see certain kinds of patterns? So the first thing I'd like to suggest is that when we talk of FPO, so we are probably coming with a certain kind of typology. So there are what Professor Tushar Shah would call Swayambhu FPOs, ones that have started by farmers autonomously. So I would tend to think that in a sense, Sahyadri is of that kind. And you may not find too many of Sahyadri kinds of initiatives, because there are very few farmers like Vilas Shinde who's gone through a process of, trying something out, failing, mobilizing people, etc. So in a sense, it's an outlier, but that is not something that should be held against Sahyadri. And then you have, so we're talking of an outlier being, if it's talking of, say, 40,000 plus FPCs, you have probably one such, which is 10,000 crores. And then you have the whole set of the milk producer companies. We probably have 10 to 15 of them now, which are also doing significant business. Now, their design principles of the milk producer companies has probably drawn from some of the earlier insights on Professor Shah's discussions on, domain centrality and so on. So it works well. They've been growing fast, but I think, again, they're very clear about keeping politics out of the whole system, but the power is slightly, probably not so much with the, with the members as much as with the professionals there. And it's important. It re-emphasizes the need for professionals if you want to scale and so on. So we're talking of probably a few like Sahyadri, and then a few like, the milk producer companies. And you will probably be hard, you'll be, if you really stretch yourself, you won't find too many farmer producer companies in the, 50 to 100 crore or 50 crore plus range. I mean, people have been asking us this often. So maybe there are Chetna kind of organizations, again, multi-state initiatives and so on, a reasonably longer history. And then you have CCD, which is, of course, not a company, but a cooperative and so on. But you also have examples of investment. One of the more celebrated ones is that of Ram Rahim, which is backed up by, the Safe Harvest, taking on some of the risk as a social enterprise. But you also have perhaps an early example of Manyam Grains, which is working in millets in Andhra Pradesh, where the investment has come partly from private capital and the FPOs also holding, each of them contributing to it. And Manyam is supposed to do all the processing and the sales. So essentially, we're talking of several such, initiatives. So the first point I'd like to suggest is there's no single FPO that we're talking about. The second is that we need a lot of innovation in this space. And I think what we're just hearing of, whether it's Chetna, whether it's Sahyadri or any of these, I think we're still at very early stages of, looking at these innovations. This kind of discussions used to happen. I think Murray would be much more aware of this at the early stage of discussions on the producer company. I think a lot of people got together. Dr. Kurian, Irma was actively involved in this, in trying to say, how do we design what should be the new generation cooperative in India? Are FPOs the new generation cooperatives? I think the discussion in agricultural cooperatives in US and other kinds of countries have many of these mechanisms. We have hardly touched the surface, so to speak. And I think discussions like this should lead us to a more serious consideration of potential innovations that can happen, drawing from experiences which are homegrown, and then seeing if we can rebuild some of these design principles. So the first thing I'd like to suggest is that, we need to rethink some of these design principles across, when we are designing institutions today. So for example, one of the common, this thing is to say, let's promote the Amul model across. And I think in some sense, this end-to-end value, value chain being owned is a very, very difficult proposition. It's something that has happened in a pre-liberalized India. And today to expect a single FPO to do all of that is asking for too much. But somehow, sometimes we're kind of stuck with that.
Yeah, we conflated with full stack actually. So that's why people think in full stack when they see the full Amul.
Absolutely. I think the other thing is about the Amul model, and therefore we have this issue of the cooperatives. So in the startup ecosystem, you actually have this concept of reverse pitching, right? So where investors pitch to the potential investees about what they're doing well. Now, ideally speaking, we need to move to a certain stage where the same happens in forming FPOs. Let the farmer members decide whether they want to form a cooperative, they want to form a producer company, or they want to form a mutually aided cooperative society. Now, such options perhaps is not existing enough in the current space. And we are sometimes creating institutions which is based on the principles of exclusion, so to speak. So the National Cooperative Organics Limited is a very nice initiative to try and enable some of the FPOs to go to scale. But unfortunately, if you're a producer company, you can't be a member of that currently, because it's kind of restricted. So I think some of our institutions are not designed for our our contemporary requirements. And we also need to move beyond what we have done earlier. So for example, one of the things that we came up was that the idea is to rethink this whole idea of design principles. So in the early formulation of Professor Shah, we realized that you have this governance structure of member institutions, then the operating system and the member system and the governance system and so on. Today we realize that if you do not include the promoting institution as part of this, as one of the key stakeholders, the role of the stakeholder can change over a period of time. But you have to incorporate them and then see what this role can change with time, because otherwise you have a serious problem of post-project sustainability of many of these institutions. And numbers are floating around of how many of these FPOs are actually going to survive or not survive and so on. So I think the thing is, what should be the design principles today for getting into these kinds of situations? So, and capital, of course, is a very serious concern. We would actually like a lot of capital coming in. And I think you started off by alluding to the, there's an excess and they're not able to find. I think there was some news item today or a few weeks back, I think of, a motorcycle showroom that got oversubscribed multiple times. And with just 8 employees. And, so capital is going in crazy directions, whereas it's not coming to the area where it actually needs to. So how do we combine this issue of profit with purpose? I think today there is an increasing acceptance that profit is not a bad word, even in the civil society organizations. And, so they're also moving in that direction where they're not looking at profit in a negative kind of connotation. But the last point I'd like to suggest, and then I can briefly touch upon this idea of, type 1 and type 2 FPOs.
Sure, yeah.
So one of the key considerations is this whole idea of inclusion. And I think by itself, the nature of capital is unlikely to be inclusive. And therefore, going back to the origins of the Small Farmers Agribusiness Consortium, I think it was called SFAC for a particular reason, set up during 1991. It was sleeping for a long while. But initially, there was a recognition that small farmers left to themselves cannot deal and negotiate with these players whose power is disproportionate to the individual, case of a individual farmer and so on. So therefore, one of the good things that has happened possibly through the FPO movement is the large number of, farmers, small farmers expressing themselves in boards situations, which were probably not the case in cooperatives, because there was a significant elite capture and very few small and marginal farmers, extremely small number of women being part of, decision-making processes, etc. And then the spread in tribal areas and, regions outside of South and West India was kind of low. I think we're seeing a slight shift in the direction. Now, the point essentially is Madhya Pradesh is being one of the better spaces where we're seeing much greater growth and a lot of interest is happening. So I think, how do we keep venture capital with a serious focus on inclusion of underserved areas, inclusion of women, inclusion of small farmers, tribals, etc. And how do we build the capacity of that? That remains a question. The third point, the final point I'd like to just briefly mention about is, again, we are thinking of a model where from what is emerging in the field, apart from a few commodities like milk and so on, where you can actually source all, you can have an exclusive license with farmers. We might be thinking of a new structure where you have this type 2 FPOs and type 2 entities. I would not necessarily call them FPOs. They can be FPOs in terms of federations of FPOs, or they could be joint ventures between an FPO and and a private entity working on slightly different principles. And I think they would be able to bring in a significant amount of perhaps capital and also enable some of these FPOs to go to scale. The kind of investment that might be required for marketing, creating brands, all of these is possible if more capital is coming in through these kinds of channels. And these need not be exclusively associated with few FPOs. So there could be a bit of flexibility that for certain kinds of commodities, the same FPO can deal with multiple, kinds of agents if required. And therefore, we are looking of a many-to-one relationship, so many-to-many kind of relationship between an FPO and a type 1 FPO and a type 2 FPO. Okay. I'll stop here and we can.
Sure. So I will come to the type 1, type 2. I think not many people may be familiar with the typology. We'll come to that and delve into it a little more deeper. But your point around the next generation is what I want to bring into Rahul. Rahul, at one level, when Shambhu was talking about the aspect of next generation cooperatives, right? Today, when I look at agri-tech ventures, right, even to shift from a FPO to agri-tech ventures, one of the key fascinating aspects that I found was, while they may not necessarily, agri-tech ventures have also taken a lot of leaf from the FPO playbook, right? While they may not necessarily, there's a need to distinguish between being as an FPO vis-a-vis doing as an FPO. Right? Like you could not really be an FPO while doing things that are almost look like an FPO. Right. So I think that's what we are seeing largely with agri-tech startups there. So and we also have now Krishnaya in this group here, who's also part of the Pasiri Panta, where he has some kind of a similar structure there. So when you are, as an investor, when you are evaluating these kind of models, right? How would you look at this kind of a player there? So would you sort of look at the cap table based on these considerations, or how? I mean, because as an investor, the cap table is sacred in terms of what needs to come in and who needs to be a part of it, and then for because that helps you scale the long run. How would you evaluate startups that have co-invested in and have some kind of a partnership with FPOs there?
So I think the main thing, like what you said, was that it's form. It's what's the substance ultimately? The form may be different. If you're delivering the same things and it actually has a commercial and social rationale, both. For impact investors, we have both lenses that we look at, right? If they deliver on both, I think it's a strong proposition. So my really outside in and very naive way of looking at partnership with FPO type entity, let's not even call them FPOs, FPO type entities. So what is the reason to exist? FPO or not as a legal nomenclature? So which basically means, why is there a reason for people to come together? And there is therefore some synergy that is derived as an outcome. And there are different types of FPO. Then you may be a producer, you may be more full stack. So not all may be relevant. So I'll just name a few factors that come in. One, I found that when there is a high cost of production, then there is a rationale for people to come together, because then you have collective bargaining power. So if you see dairy, poultry, horticulture, where you see, there is the cost of production is high, on a per unit output basis. The second is, if it's a more technical type of a production, if you're doing regular, let's say rice, for example, it's a very established technology. But if you're trying to do some type of a specialized herbs or things like that, there is this, or let's say you're doing stuff for export, you need to know what are the pesticide residue norms, and what is the farming, the whole agronomy around it. So it's a more technical type of growing that is required. Or let's say now for spice, it's becoming a huge thing about pesticide free, etc. So all of that. So a more technical it goes, then there's a reason for somebody to help you with the whole agronomy aspect, and you need to come together, because as smallholder farmers, you're not going to get access to that technology. The third, which I find is a more social type of a factor, is what is the frequency of interaction between the members and the management. And if there are and frequency of interaction is not just meeting for a cup of tea, right? It's when there is an actual transaction taking place, an exchange happening. And if you look at dairy, there is a transaction daily in that sense. Milking is a daily activity, feeding is a daily activity. It's the same thing for poultry. In horticulture also, to some extent. So you may have a harvest which is in a certain window, but the whole agronomy piece requires you to have a very frequent type of an interaction, right? So that kind of keeps members together, as opposed to things which are you're growing stuff, there is a somewhat loose association on the input side, and then you have one harvest which takes place in 2 days, and end of story, see you next year.
Yeah, I think, I mean, even right now, when we talk about the form and the substance, where, I'm reminded of recently, at some time back, I went and saw a group of farmers in Udaipur. There, to avoid the entire institutional burden, they had collaborated as without even a formal structure. So I think in the Indian context, dealing with the form and substance is a very tricky aspect in terms of how they navigate through that. So thank you.
And the last point there is on commercial rationale, is if that FPO is part of a broader value chain. As a producer FPO, you're producing stuff. If there's a marketing module attached to it, in whichever shape, maybe it's a linkage to, let's say, the ITC network or a Unilever network, that you're producing things of a higher, or let's say the Dabur network, where they're producing spices, herbs, stuff like that, right? So it's not only about bargaining power, it's about how you can be part of a value chain which is more value additive ultimately. So if you see like this is Sahyadri model, initially initial playbook of Sahyadri on the grape side, it started with the export side. So and export quality grapes sell for 2x the price, and even the cost of production is higher. There's still 40-50% higher income net to the farmer level, right? There's a commercial rationale for you to join this whole scheme. So and this takes, so across these parameters, different organizations have different levers. Some may help you with the cost of production aspect, but may not have a marketing linkage in place. That's okay. Or may just offer technical services and may have nothing significant to offer on the other elements. But there has to be something around that now, whether it's done formally, informally, through FPO structure or something else. I think that remains to be that is fungible and negotiable.
Yeah, and which
from
is where
investors' lens.
Yeah, and which is where I want to bring it to Emmanuel here from a policy, right? I know, Emmanuel, you were talking to me earlier in our conversation where some of you've put together a sort of a policy recommendation to NABARD on respect to financing for FPOs. Shambhu was just a while talking about keeping politics aside, right? Today, when we look at post 2021, where we see a lot of PSES activities in the down south. And whereas they may not be, we still see FPO activity largely. I mean, my understanding of the spatial distribution is I see PSES activities happening in the south, whereas FPO activities are largely happening in the north. How do you see these two sort of forces coming in together here? I know some of the people who have been tracking it have almost now come up to the stage of giving up hope on FPOs because they see that PSES with the kind of its political might and the muscle could largely overshadow the FPO structure, which is still a nascent. And right now, when I look at the 24 set of initiatives that have been put together by Ministry of Cooperation, there is an entirely national cooperative policy also that's being in the cards. And with now again a national FPO policy in the cards, I wonder how you are seeing this kind of a very chaotic landscape in some sense. Do you see some sense of clarity emerging in between these two entities and how they can coexist?
I think they will coexist. There's no doubt about it. So as Rahul had nicely pointed out, the glue that keeps this farmer members together in the FPO is the critical factor. So what value add is it providing? What's the reason I should be a member of the FPO? The question that has to be answered. And in spite of many of us being pretty skeptical about the future, a significant number of FPOs are doing outstandingly well, which is 20 to 25%, which itself is a pretty large number in my view. FPOs emerging as successful business entities. And the difference between the cooperative structure and the FPOs is leadership. Basically, the cooperatives are political institutions across the country. So they affiliate with the party in power. And FPOs are emerging in terms of both leadership, in terms of social constitution, including the variety of promoting institutions that are forming these. That's giving a lot of richness to ideas and opportunities that are being created in the FPO space. So it's really exciting. Cooperatives, I think what the Minister of Cooperation is trying to do is to replicate the Gujarat model of Amul to the national cooperative movement. The Amul Federation and all unions were affiliated to the Congress. And over time, the BJP overran all these guys. So now the same kind of political takeover of cooperative institutions is the underlying, mission of these guys. So FPOs, fortunately, because there's very small entities and haven't made a big mark on the system, have been left to themselves. And fortunately, today, Agriculture Ministry is taking lead in dealing with the issues of FPOs. The Minister of Corporation is hands off from this thing. So these two are not mixed up in some way. And the policies are also working towards federating these institutions. I think, see, there is one that, there could be a policy which forecasts or which envisions what is the right way of doing things. And the other way is the emergence of institutions according to the realities on the ground. And so both these are happening basically. So federation or some kind of collective structures of FPOs will emerge out of both a need and out of a kind of a policy push also. Some of them will do well and succeed. Some already are doing well. So this whole policy framework is now trying to support that in terms of funding, in terms of other kinds of things, so as to be able to help these kind of, as Professor Shambhu and his folks say, second tier two kind of FPOs to emerge. That is how it is happening, and I think it's a good thing. Not all FPOs are going to be a large corporates. Many of them will remain localized institutions.
Interesting. I think, thank you. I think now that you're saying that they're going to be small localized entities, before I move to Shambhu, I want to bring another question here, which is, since you also invested in, you also sit in the board of Kiwi, which lends, and you also, social enterprises, and you also sit in with Chetna kind of FPOs. I wonder how you see the relationship between the FPOs and the social enterprises that are also coexisting there, because from the ground reality and from the ground experiences, anecdotes I'm hearing on the ground is that, like today, there was recently I think a friend of mine was sharing this anecdote of how an FPO which had collaborated with another venture, and the partner venture then began to take reach out to their customers there. So in a certain sense, there seems to be some kind of a conflict of interest between the social the business ventures that are partnering with them, because for them there is another buyer, vis-a-vis partnering with FPOs there. So are you, from your research and from your policy angles there, do you see the need to put some kind of a some kind of a firewall or a barricade in terms of because in one sense, both entities are trying to chase the buyers and grow their businesses. One social business at one end, there's also an FPO at one end. Do you see some kind of a conflict of interest that needs to be addressed in through some kind of a policy mechanism?
Okay, yeah. So the farmer has to have the final say in taking a call on who he deals with. So it is not necessary for him to tie up his life with a FPO. He could be a member, but as long as the FPO adds value and provides services relevant to him, he could do that. He could deal with others outside of that. So institution like Kiwi will provide, let's say, credit, uh, even market linkages, and the farmer should be free to use that. Now, an institution like Chetna is building something very unique. Say, organic cotton today is in heavy demand world over, and it's just India, Pakistan, Egypt, and Turkey who are going to provide this cotton to the world. And so, trying to, the work that is required to bring, cotton, organic cotton to the market is tremendous. You have to work with each individual farmer, get his farm certified, get traceability in place, then find buyers who are looking for this, and then build that whole network. And that, I think, is some of it, or a large part of it, is not commercial. It's developmental work. So would Kiwi want to do this? I doubt. Kiwi may want to lend, Kiwi may want to do marketing. But if you want to, a buyer in, let's say, Sweden or in Japan, makes a trip. This is the ideal, October to December is the pilgrimage time for buyers of Chetna. They come in the hundreds, spend 15 days. They want to know who these farmers are, find that traceability loop, and all that is the great work that only a farmer institution can do, which no commercial institution would be able to replicate.
Okay. Yeah, I'll come to Shambhu. Shambhu, one of the things that now we are also hearing in is as it may be a small localized entity, and I think in your book you have this nice term called startup collective, which is an interesting term in terms of while we have while we still don't accommodate as much as for the startup risk, but as a startup collective as an entity. We still don't really have a clear kind of a sort of a model in terms of how those kind of entities will emerge. It could be of all size, right? So maybe, would you want to talk a little bit more about the type 1 and type 2, and also sort of showcase, and how do you see the end state for these evolution will be? Would you see some kind of today, at ecosystemic levels, like we have models like Visa International, right, where they've set up these market dynamic based entities where members will come together, and that's what we saw in terms of creation of Visa International, right, as a chaotic kind of form. Do you see those kind of ecosystemic structures also evolving further from these type 1, type 2 there? How does the future, you're envisaging in from these kind of, I'm looking at these as primordial structures, and I'm just trying to see how they could be extrapolated further. You're on mute, sir.
Yeah, so Venki, I think there are various elements to this question. So if we were to seriously look at FPOs as startups, I think we need to explore various ways by which they can be strengthened. So, for example, two things that haven't really been addressed enough in the policy landscape is emerging opportunities for FPOs receiving money. The kind of developmental work that Emmanuel was referring to could actually come from CSRs as well. So CSR funds today cannot go directly to an FPO. So can we actually break that in some sense so that can happen? The second is, I think, with the emerging idea of a social stock exchange, no one's talking about FPO as a potential recipient of this, this new institution that has been created. And perhaps it might be easier because the metrics are also reasonably clear for this than many of the non-profits and so on. So these mechanisms are currently not open for FPOs, and I think we need to try and move possibly in that direction. The other thing I'd like to suggest is that when we talk about FPOs, I think it is now clearly emerging that if you want to engage with the market, we have to let go of certain kinds of notions that we have, that on the output side, unlike milk producer companies, where you can kind of procure all the milk and then sell, it is not possible for FPOs to do the same. So on the output side, on the input side, you might work with all the members, but on the output side, you might work with only 25% of them who can meet the criteria of the requirement that is there. The second is if an FPO has an order, which over a period of time has made this kind of a linkage, there's probably nothing wrong in an FPO being entrepreneurial in servicing that order by working with non-members as well. A good example we found with the Krishidan Farmer Producer Company, where they actually had used larger farmers who are not members to participate in this process as well. So there are certain activities which affect all the farmers, agricultural extension being a key element, which not all of those people will be translating into membership for membership and also in dealing with external markets.
So in fact, you are told me that 10 times the revenues are impacted by the extension in the book. You've quoted for the Krishidan there.
Yes.
Yeah.
So we probably need to look at various kinds of opportunities that exist. Now, one of the advantages potentially of the company format is actually the possibility of mergers and acquisitions. So, for example, Krishidan started off with a negative. It was a dairy producer company and was running not so well for the first few years. But then it was possible for legally to change the name and then take on some of the work there and work in other districts as well. So potentially a producer company has greater flexibility than earlier forms. And I think that flexibility should be used much, much more. One of the things which, of course, is still not being used enough, I think Emmanuel is probably an example of that. The FPOs have a potential of using expert directors in the board who may not have voting rights. I think there is a movement now by NAFPO and others to try and expand the scope. So I think so there are certain design features that make this much more possible in today's time. And I think some of these should actually also translate into the cooperative space. So if you do not have a significant turnover, it probably is not a good idea to go into producer company registration. I think we've seen many cases of examples of people paying significant amount of fines because of the nature of transactions and so on. If the cooperative policies are somewhat liberalized, essentially it boils down to ease of doing business. So for the farmer. So if we are able to work in a coordinated manner to make that ease of doing business happen, I think we will be maybe able to open up these opportunities. The essential thing is also to try and re-emphasize this shift. In lending, one of the cases you have is, the credit at very low rates of interest, etc., for agriculture. And there is no scrutiny on the fact that it is not used for agriculture. But when it comes to FPOs, the scrutiny is quite high, nothing wrong with it. But if we want to move towards a system where all players are playing fair, so to speak, I think we need to try and give that kind of space. So when we talk to bankers, we're having discussions with the State Bank at IRMA, where many of their officers are getting trained. Very few of them have actually visited an FPO. And their criteria today is that if a CIBIL score is not right, then don't lend. So you can find hundreds of reasons for not lending to an FPO. The encouragement is, can nationalized mainstream banks find 10 or 20 reasons why they should still lend to FPOs? And can we actually increase the amount of credit that's coming at the primary level to these FPOs? And then I think you can then top up with various other kinds of options.
Yeah, I think in many ways, while there are, I'll leave Emmanuel to maybe add more on this there, but there are various ways where we can start. I mean, at least from the digital end, I know many of the techies are sort of, some of us are trying to bring together various ways of directory. And in fact, there has been a conversation in the agripreneurs community that I manage, where we've been talking about also creating an entity where we can also review our transactions in terms of whether the payments made on time, if the payments didn't go on time. So I think some of those structures could very well be replicated in an FPO context as well, and some of these mechanisms could really help in also making it lending easier. Like today, if there's no way for an SMB firm also, where if I'm able to take see what are the last payments that didn't go right on POs that are not followed. So a lot of those aspects, if they could be institutionalized and captured, maybe some of that revenue data could also be of benefit here. Yeah. So before I open up the floor to we have a very diverse guest, I want to bring in a founder's perspective here. Krishna, if you could join to the podium here. Krishna, I wanted to bring in here from the founder's perspective because we heard from a policy and we also heard from an investor perspective here. Krishna is also sort of looking at from a founder's aspect in terms of how he brought together there, and I thought it'll be a good addition to this perspective, because since you're trying to create a full picture of ecosystem here, so maybe Krishna, if you could like to give an introduction of what your company does, and also focus largely only on the aspect of how you brought together the mutually aided cooperative society structure into your company, and maybe you could elaborate a little bit more on that.
Yeah, sure, Venki. And it's a privilege to be, with the people like Emmanuel, Rahul, and Shambhu Prasad. I'll just give the context actually, because everything depends on the context. So the Pasidi Panta actually, currently we are operating in spices where we have a competitive advantage globally. And if you look at the spices like red chili, turmeric, and black pepper, and many other spice commodities, So initially, when we started, studying, like, what should we do? Like, should we end up doing everyone, what others have been doing, or should we do something different? So we actually did a market research, just trying to understand, what is the differentiator that we can bring onto the table. So we looked at the supply side. That's basically the farmers, the farmer producer organizations, and many other stakeholders. And we also looked at the demand side, the market players, the processors and the consumer brands operating domestically and globally. So we realized that there are challenges that both the sides of the industry that are facing, right? Because when we interacted with the processors and the consumer brands, clearly three things came out. The first one is, the pesticide residues, because Rahul also mentioned, like, there are a lot of pesticide residues issues across all the agri commodity value chains, but some industries like spice industry is proactive, and that's where the issues gets highlighted, but it is a common pain point for across all the agri commodities. So the companies which wants to sell to the global brands, they come across these pesticide residues is a problem, because any consumer brand at the end actually promises healthy, nutritious produce to the consumers. When the pesticide residues there, it's actually it's the whole brand image, right? And if there is any the product recall, there are a lot of reputation loss, and there is a product recall loss, which any global consumer brand wants to avoid. And the second one, most of the consumers and the global brands started expecting the sustainability compliance. You take the global companies like Nestle, the Tata Consumer, everybody has got, like, 2030, we wanted to have at least 50% of our raw material and ingredients have to come from the sustainable sources. And they also have the carbon footprint commitment, they have the people commitments. So they are looking for partners who can actually bring or deliver on these sustainability commitments. And third one is the traceability. They want to know actually who is my primary producer, who is producing this crop, and who is the aggregator who is aggregating, and what is the value that is actually shared across the supply chain. They wanted to have a visibility. So these three that are the problem that we have seen: the pesticide residues, the sustainability complaints, and the traceability. So these were the expectations from the market side. And when we looked at the farmer side, we all know the farmer needs multiple products and services. They are disconnected with the market, and they end up doing what they have been doing or what their neighbor has been doing, and there's a problem. Their profitability gets affected, and the end the produce food safe compliance gets affected. So that's why we thought, no, we have to work with both the players, the suppliers, the supply side and the demand side. And then we came up this model saying that, no, see, we will go to the farmer, and we tell him that we will give you the market assurance that we will buy back the material with a fair price. But these ABC is what you need to do, especially when it comes to using the agrochemicals. It's the rational use of agrochemicals, rational use of energy and other inputs. And there is a technical support that we provide to the farmers.
Yeah, could you
And
also
while we
talk a little
doing, we
bit more on
actually,
the FCS structure also? Yeah, that will really be helpful also.
yeah, I'll come to that. I'll come to that. So when we realize that it's not just giving the training and giving the advisory is sufficient, we actually need to ensure that the inputs that we are saying are recommended. You should have to ensure that these are accessible to the farmers, accessible at affordable prices. And then there should be a mechanism where you get buy back the material from the producers. And we also need to have sustainability certifications. Means, you need to have a sizable the suppliers, means the farmers. And that's where we thought, no, let's organize these farmers. Earlier we were only working with individual farmers, but later we realized that, no, we have to organize these farmers into some kind of collective. And the easiest collective that we thought was, the mutually aided cooperative structure. So because it's less of compliances, more freedom, and that's the reason why we went for a max. So how we structured these, the individual at the village level, we have the farmer producer groups, basically the people who wants to do the IPM cultivation of chilies. And these groups, actually through them we ensure that all our last mile services are reaching the member farmers. And over a period of time, we emerged into a network, actually, a network of the collectives, where at the apex body, it's the Pasipanta Private Limited, which is registered as a private entity, and we have our own investors. But bottom, we actually built the social capital in the form of the village level entrepreneurs and the mutually aided cooperative societies. So the way that we actually did this was, we identified progressive, local, influential farmers and made them to come to the board. It's a combination. We took our own sweet time. We are not driven by the top-down approach that in 3 years the FPO has to sustain. We don't have any of those pressures. So we took our own sweet time and we identified these local influential people who have a social motive, and we also have the entrepreneurial abilities. So we ensure that they come to the board of the mutually aided cooperative societies, and the organization structured is in such a way that the Pasipanta is more of external facilitator. We bring in the ecosystem connections, be it the buyers on the output side, be it the agri input players, the crop insurance providers, financial institutions, everything that is needed is actually facilitated by the private entity. But the implementation of each of these activities, providing end-to-end services to the farmers, is actually done by the mutually aided cooperative society. So it's
Great.
a win-win actually, because so the farmer's objective is, their needs need to be fulfilled. And what are those needs? They need the inputs, they need the services. So all of those are facilitated by the mutually aided cooperative societies, and the all the commercial transactions are actually dealt by the private limited entity. And our plan is that you have these mutually aided cooperative societies which are focusing on single commodities. See, we have the commodity focus, like NDB did on milk, and Sahyadri did initially on the grapes and then tomato. So the commodity focus is very, very important actually to scale. And we look at a model where you have a cooperative in each of these states, and all of them become a stakeholder or shareholder in Pasipanta Private Limited. And at every entity, there is a value that gets created, and that value is distributed across the supply chain or across this collective network. Starting from the progressive farmers, the village level entrepreneur, he has got his incentive, and at the FPC level, we call FPO or the max, whatever collective you call it. So there is a value that gets created, and when they become a shareholder in the private limited, as the business grows, they also actually share a part of the value that gets created. So this is the structure that we envisaged, and we have learned a lot from others, and we also learned from our own experience also. Probably I'll stop it here, and if there are any questions, I can
Thank
probably
you,
throw some light.
Krishnaya. I think this is very interesting. See, at one level, we talked about conflict of interest from from an FPO to social enterprises to kind of coming up with more skin in the game models, where there is a certain sense of skin in the game relationship between the mutual aided cooperative society at one end and the private players at one end. So I wanted to bring your example here as a way to kind of to really set the stage for us to look at creative possibilities and bring this kind of collaboration. So thank you very, very much for sharing this with this. I also want to open the floor for I know we have a very, very distinct set of lot of observers also. Mariappan is from he's from the NDDP. He's also he's been sort of also, we've been having a lot of conversations around this. So Mariappan, I don't know if you would like to share any thoughts and perspectives. Yeah.
Yeah, good afternoon, everyone. My actual video is very weak, so
no problem, sir.
Hiding myself. One thing which always comes in the mind is farmer is never bothered about the structure. He is just looking for a market with a reasonable price. Whatever the format, it is the professional whom we, like us, we are creating that either the limitation or the inhibition, whatever you call it, or the constraint. So in terms of working capital, in terms of timely input supply at a cost, as well as he produce more and the market goes down, can anybody ensure whatever the format it is? Say the max which he talked about. हो सकता है he may be doing the fantastic job of ensuring that kind of assurance, as well as the minimum, at least whatever the government call it as a MSP, isn't it? So this particular aspect of ensuring or giving a guarantee to the farmer that whatever you produce as a professionals, we will be able to help you out in creating a market at a lower cost but at a higher price. Whatever the format it is, he may not be really bothered about. That's what I thought. So let us wait for these two policies which is going to come up. One is on the cooperative policy side, or the other side is on the FPO policy side. But kind of Incofin, Rahul kind of entities, will they be also having such a policy where they will confidently fund those FPOs instead of waiting for a private entity to come up to fund? Will they be able to take such risks? So that's a question. It's a. I hope he will be able to give some kind of a satisfactory.
Rahul, would you like to answer that question?
Yeah, the question is how, because as a private limited, as a fund, how do you invest in an FPO? Because individuals only can be members, so so a direct investment would really not be possible. It'll always be in a side entity or a joint venture, and this is where one of the key features of a cooperative type structure and a private limited company also come to head, which is the one member, one vote. You may have a differential in the economic interest based on the capital you put in, but a private investor, based on the equity that he's putting in, would not like to be a part of a one member, one vote type of a framework. You would want proportionate representation to the capital that you've put in, and that's why even globally, if you see the collaboration between the private sector from a investment perspective has usually been in some type of a partnership or a JV or those type of collaboration. So a direct investment, I'm not sure whether it's at all possible to begin with from a legal perspective, but even if it were, from a practical perspective, I'm not sure whether it will fructify.
One more question. Is there any kind of producer collectives which CSR part of Rabobank or any of the institutions which are really able to provide support? Because the question always is looking for is the working capital question. That is one thing. Second one is the farmer is always willing to dispose of or sell the produce. Many of the FPOs, what they are doing is they are acting like a commission agents.
Yes.
The produce will always be in your name only. I will find out a market. I will find out a price. If it is a plus, we will share it. If it is minus, we will not share it. You will bear it. So, is it the buyer seller arrangement with the private entity, or the farmer is there? He has to hold the risk. That is where the question comes. Is there any experience of a CSR part? Can they help in such producer entities? Because the CSR says that they cannot fund any of the any of the organization which are all commercial, whether even if it is a producer organization. This particular element of, again, the funding problem. We have created many strings and restrictions that the farmer is not really able to come out of these kind of restrictions.
Yeah. So what I feel about that is that see, one has to kind of dealing between what is the definition of CSR in the Companies Act type of a construct, and when you speak about global foundations, they are not investing out of the CSR funds which a private limited or a public company in India has to do as per law. So there are several restrictions around where that capital can be used. Now, if you look at foundations or global investors, even domestic foundations for that matter, it's a free hand. It depends upon the objective or that particular foundation, you know, in terms of why it was created and what are the end objectives that they aim to achieve. Typically, they would not help, and this is a broad brush. Typically, they would try to work towards capacity creation.
Right.
So you create, let's say, infrastructure. They might they might provide a grant to create some type of infrastructure, or let's say a consulting a type of a arrangement to get integrated pest management into place, or agronomy type of a project. But they would typically not be the de-risking agent for an ongoing activity of production and sale.
Right.
So they might help in getting some farm level infrastructure in place, which would allow you to do higher value addition processing, or let's say storage. So you may choose at least to have an option of not making that sale, forcibly. You have an option of storing it somewhere and selling it a few weeks or months down the line. So creating those types of capacities, but they would typically not, from a grant perspective, try to de-risk a normal trade activity, which is working capital type in nature. And also from a FPO's perspective, I think there are many models out there, but if you see broadly, a lot of the work that the FPOs have done has been on the input side. And a key reason for that is that part of the work requires no working capital. It points to the paucity of working capital that is there at the FPO level. It is only, and the other things are that you alluded to, that FPOs act as a commission agent or an intermediary. Well, a key factor in that is that they don't have the capacity to hold, which would require working capital again.
That's right.
Right.
Yeah.
So FPOs which have gone into processing, they are a processor like anybody else, and they have to figure out their working capital situation and buy in a season just like any other processor has to. And those are FPOs who have a more back-to-back, or processors also, increasingly you'll find who are getting things grown in a bespoke manner, like integrated pest management, for example. That spice is being grown with a certain objective in mind, or things for export which have no spot market, like gherkins and things like that, right? But broadly, till the working capital situation is solved, you will not find FPOs becoming a principal in this whole transaction.
Right. Thanks.
Shambhu, you wanted to add to that?
Yeah, just very briefly, I think one of the useful ways of looking at policy is this distinction that Tushar Shah made earlier about core principles and auxiliary principles, while referring to the dairy cooperative structure as well in the designs. And one of the things that we recall a lot is that this three-tier structure of Amul, he said, is actually an auxiliary. It's not the core. And the core, at that time, he came up with certain kinds of 6 principles. Now, to me today, I think one of the core principles in design of policy is the fact that the experts who are having a lot of skin in the game are probably not sufficiently represented in the design of the policy. So in terms of the cooperative policy, I would see much less, perhaps more in the case of the draft national FPO policy, there's been a bit more of a consultation. The current considerations, maybe they're not going to answer some of these questions at all. And I think it does require more effort to try and push the envelope in these kinds of directions. Again, drawing from innovations that have been happening on the ground. So one thing that I forgot to mention is the Plowman Agri Private Limited. Again, something that emerged in the last 2-3 years. And they have also created a structure drawing from the FPO movement. ASA got in, set up this institution. It incubated a new kind of institution, which is in the private sector space, and it's able to attract funds and also, work out a model that seems to be growing significantly in scale and getting professional manpower and so on. So I think there are other ways to do this. there's something that the FPO policy, the cooperative policy is not going to answer, which is, I think, the big question about this whole thing about the ratio of subsidies to investments in agriculture. And I think currently it is too much in the side of subsidies. Therefore, there isn't enough investments coming in. And not all investments today needs to go only in the direction of agricultural R&D and all. Not to say that it is not required, but I think some of these investments need to be explored in these newer kinds of directions. So if you're talking of PLI and productivity linked incentive, now today's newspaper talks about design linked incentives for 12 startups in the semiconductor space. Why can't we think of similar such initiatives for farmers as well? I think it does require a bit of innovations in policy to make it much more, in favorable of farmers and their institutions.
Yeah, so right now, unfortunately, the only innovation right now that's being talked about in the policy front from an agriculture is pertaining to the digital public infrastructure. I'm in touch with few consultations with respect to DPI, where right now there is attempt to sort of pool together various players and create at a block level or a district level some kind of a cohesive entity through which you can kind of reduce, like what Rahul was alluding, right? You need to reduce the cost and then kind of pool in that capital together for that block. So unified agriculture interface and multiple initiatives are being planned out around this, but I think but like you rightly pointed out, we still need a lot more focus on innovation to bring together there. Yeah. Great. Any more questions? Anyone would like to ask questions or anything, point out any feedback? We have about 9 minutes left.
Hello.
Yes, Bharti.
Okay. Hello. Okay.
Yeah, you're
So
audible. Please go ahead.
Okay. Yeah, so I think it's hello everyone, by the way. Thank you for the great talk. I have been eager for this talk for a long time, because I always listen to eminent speakers talk about a lot of areas in agriculture, and I do not have an agricultural background. I have a CS background, but yeah, I'm very curious to know all the time. Anyways, so my question is, me being a CS professional sitting not in India, do I have a chance to invest in some of the FPOs? Um, if there are like some investment platforms that I look at, I do get a lot of like I searched for investment platforms, and basically these were the ones that popped up essentially. So when I
Two
made
of
a
them
list
are
of
in trouble now, and yeah, one
Yes,
of them are closed
exactly. So,
down.
so exactly, that's where I was going to. So, how does a person trust any of these platforms, and B, like, what do you see the future of such platforms is? If yeah, if in the future someone tries to come up with a good platform, basically, what would be your advice to them, essentially? It's a very broad question.
Maybe I'll add a bit of a layer to it. So today you
Yes.
have private player entities like Rangde, which is sort of offering some kind of 6% term loans or interest subvention loans to players. I think CSA is partnered with them, and also other like Samunati is now coming up with specific set of instruments that are being coming up there. But I think your question is, can we create structures and platforms that address any of this there? Yeah, would anyone like to take it? Or yeah, yes, Ravi Shambhu.
Yeah, so very briefly, Bharti, I think others could also chip in. One of the things we would like to suggest to everyone, whether it's a banker or someone having an interest in the FPO space, is to probably just go and visit a few FPOs before you design anything. I think work from the current pain points that some of the FPOs are facing. And sometimes you might come up with interesting solutions. So let me just give you an example of one such a case which happened with an FPO Tirunelli in Kerala. I think one of the things that happened is, people, they was having this struggle for working capital. But the CEO of Tirunelli had lots of friends, and the friends of the FPO managed to convince the local branch manager to move their deposits from some other branch of theirs to the local branch so that that could work out in terms of working capital. So this is an unconventional way to raise resources, but this emerges from a certain kind of conversation. So our existing platforms might have certain kinds of limitations, but sometimes we may have to just work from first principles. Some
Okay.
unsolicited advice. But I think the key thing again for funding and all of that is to actually, because the nature of this institution is it's a complex entity, if not a beast. And I think it does require some time to understand this entity before we come up with solutions.
Right, right. I guess I think Venki's whole platform has been like a peak for me into this whole giant what Indian agriculture is basically. But are there any other resources that I could look at? I have noted down your book, but for a next read. But are there any other resources that you could point me to, essentially, or is it that I have to basically go in India and then talk to people now? I think that's where it has to go. Yeah.
But Bharti, we can take it offline. But one of the things that we have
Yeah,
actually tried coming out is after the 15 case studies that we've developed, we had a meeting in April. Emmanuel is also there. The idea was to develop a case study protocol that can be used by others to develop similar kinds of case studies. So for example, I might encourage you to try and use this to understand what Krishnaya and Pasidipanta is doing, and try and in some of the things by visiting them and so on. So just as an example, but there could be many other things that we could probably discuss offline.
Okay.
I would suggest that to professionally engage with some of these FPOs and understand their businesses without investing being an underlying objective, and see how we could support them. And I think even in terms of designing structures which attract capital to them is a need. So looking at the legislation, because we're very scared about compliance and violating of the laws of the land, the penalties are huge. And so we do not want to be creative in trying to do something. But it's a space that needs research. Even the government and others are open to exploring if they are given suggestions. So understanding the business, simple thing like maybe even as Professor Shambhu was saying, guaranteeing a loan for an FPO would suffice rather than yourself putting money there. And even amounts like 10 lakhs or 20 lakhs could make a difference. So those ways. So just find an FPO which in a geography which interests you, or a promoting institution where you are comfortable with, attend online some of the meetings, understand them. You need not even physically go there. You will be fascinated by what they do, and you will contribute towards policy making also. Yeah.
Great, thank you. Yes, Vivek, please go ahead.
Thank you, everyone. But this was an amazing session. Learned a lot. Can you guys hear me?
Yeah. We can hear you. We can't see you though, but yeah, that's okay.
Yeah, that's all the case. Out somewhere. So
no
I
worries.
have a
Go
question I have a question for all three panelists. It's kind of somehow the word complexity has featured quite a lot of times in this conversation. I kind of want to allude to the goal. So in conversations, we have addressed FPOs have been used as a vehicle for social changes. There are social goals, there are operational goals, and there are capital goals, right? So we discussed all three of them. But from a policy standpoint, which are the ones that have the maximum failure? And I liked how Emmanuel sir mentioned that the one farmer, one vote kind of policy of cooperatives, where farmers get to vote on the decisions that the cooperative entity needs to make, but which end up turning into political institutes, right? So the question is kind of each of these goals, social, operational, and capital, have different, I would say, different needs. So the cooperative model doesn't work for all three of them. If I'm working for a company, there is someone who's making the calls for it. What I see when we interact with FPOs is the CEO is just a a designated person. It's the chairman who makes the decisions, right? The people who found, they're like the founders, right? Recently, there's been a discussion about founder mode and manager mode, but CEOs are not making the calls in FPOs. And some of the FPOs, I wouldn't say not the successful ones, but
can you just interrupt briefly here? See, I know some of the folks are kind of going dropping off, but just maybe if it's okay, we stretch it a bit, put about 3, 4, 5 more minutes. Is that okay with all of you, gentlemen? Yeah. Okay. Yes. Could I request you to keep your question precise, please?
yes. So that my question is that if there was a policy intervention to be made, which were the immediate goals that we should address? Is it the capital? Is it the social? Or is it the operation? As a policy is being developed, right? So which are the goals that are high priority from a government standpoint or from a policy angle?
From my perspective, if I can go first on this, I think it's enabling the financial goals. I don't think it's necessary for the government to provide the finances, but it would just create framework for channeling capital through a variety of sources in. It will enable those entities to also meet their social and operational goals.
Yeah, so briefly, I think just to extend what Rahul has said, I think these policies are already in place. So there's little one can do. I think the national FPO policy a draft is being floated around, and there's not too much of leeway in trying to influence the policy in either direction. I think the key element is to make some of the policy processes more consultative. I think this time we are slightly better off than what had happened last time, because the operation guidelines came up during COVID, and there was hardly any discussion. And, there was a thrust towards targets instead of actually focusing on the institutions. So, but I think we need to look at things beyond what the policies would also indicate. And some of the spaces that we're talking of will not be addressed in the policies as well. Like, this whole thing about investment is still very unclear in the policy space. So we'll have to find ways of addressing the issues that are important for FPOs, either through policy or through interventions by players outside of policy who are interested in the future of FPO. So just a caution that the policy is going to solve everything.
You already made it. You already brought us back to reality and both the policies there. So I understand. Great. Thank you. Yes, Soumya, please.
Yeah, I have two questions. One is at a very broad level, there was a reference to that a lot of change is being initiated because on the demand side, a lot of the global food companies are now looking for things within quotes, traceability, ESG norms, carbon footprint reduction, etc., pesticide less, and so on. Assuming that that is a very big force, which will dictate some of the shifts and eventually impact a lot of behavior in terms of farming or FPOs, etc. My question is, a word was used which is commodity focus, and I understand that that makes life very easy, having been part of social enterprises and cooperatives myself, especially with cash crops. How does that sit with a perspective of agronomy change that talks about biodiversity? Would it not continuously promote the monocropping, large-scale cropping as a behavior? And what is the current conversation around that is what I would like to know, especially from the spices example, let's say. Yeah, so that's one question. The second is more sort of closer to the ground, where there was mention that global funds are less constricted. And if we could align on purpose of certain goals, it might, global foundations, I'm talking about grants, not equity investing. Then my question is that if we look at two things post-harvest, one is storage and the other is first level, minimal level processing. From Rahul's experience, are there global funds that would support creation of such infrastructure within quotes? Since he said that foundations are willing to put in money to create infrastructure if it were to be, meeting the other norms in terms of governance and held by FPOs, etc. These would be my two very different questions for now.
Anybody would like to take a call? Yeah.
Yeah, I think the first one I can take because that was more on the spices. So the most of the global brands which are pushing the sustainability agenda, they take the biodiversity, the soil health, water conservation, carbon footprint reduction, uh, the the diversification of risk for farmers. They talk about living income. So all of these are very much considered as part of the sustainability agenda. For example, we work with a global consumer brand and we implement. Actually, we design the sustainability initiative for them. So it actually takes care of all the three. People, planet, and then the profit. When we say profit, it's not profit for the brand, but profit for the stakeholders that include the farmers and the community, all of those. So in the sustainability initiative, all these are taken care. For example, if I take the red chili that we are promoting, so we tell farmers that along with red chili, you actually have to go for intercropping with the radish and then the coriander. So there are complementary crops which actually one that helps farmers to diversify his income source. So he actually gains additional income from the remaining crops. And also it actually reduces the pest and disease population on the main crop. Second, we also encourage farmers to grow the agroforestry, all the four the borders of the plot.
Yeah,
That's in a way, you are increasing the carbon sequestration, you are also allowing the wind breaking take place. So all of those, the biodiversity, all those aspects actually are considered in designing and implementing the sustainability initiative. We are not blindly promoting the monocropping patterns.
So quick follow-up question, if I may be allowed.
Soumya, could we have that offline there, please? Sorry, I want to respect the guest time commitment that I've promised there. So please. Yes, now Rahul, you want to answer the second question if the question is still in your mind?
Yeah. So short answer is yes, it is possible, but those pathways have not been established deeply yet. So somebody will need to do that initial pioneering work of getting these foundations in. But from an intent perspective, there is strong intent, particularly from European family office foundations. The challenge there is that these foundations always have very, very specific use cases. You will find somebody, if you talk in the urban context, that they want to provide safe, just to give an example of how extreme it can be, safe driving habits in the young population. So safe driving habits, not for old population, but only for young in urban. So it can be very, very specific. So, and even for us as impact investors, it's a challenge to reach the right people who, for whom the objective of a particular fund that we're setting up resonate with. So, and that is also the reason why we end up setting up quite a number of different funds with different impact objectives. To cater to the impact objectives of these foundations. So it's not an easy task, but fundamentally, that appetite is there.
Thank you.
Great, thank you. With that, I'll probably thank everyone, Shambhu, Rahul, for really taking time. I know it must have been quite a toll to keep Monday morning blocked for this. Deeply grateful that you all took time. See, one of the fundamental intent when bringing all together, all of you people, gentlemen and ladies and gentlemen here in this group is to make sure that we create these ecosystems for newer possibilities to emerge. Otherwise, these groups generally you don't get an occasion to bring together all of you together. So that's the reason why we do this also in a little close group so that there's more intimacy and more openness to talk about things that may be controversial. So, but that said, thank you deeply, for all the candor and for the honesty in which all of you shared. Deeply humbled by your responses, and I'm hoping that we create these seeds of spaces of conversations for us to foster that, because the idea is not to just have conversation, but the idea is to really take that forward. So, and I hope I'm happy to connect either of you to whomever you want me to, and so that we could take this beyond just conversation and actually implement it there for all the futures that our children are really overs to. Thank you very much. Have a lovely day.
Thank you so much.
Thank you so much.
Thank you.
Thank you,
Thank
Venki.
you. Thank you so
Most
much.
wisdom. Yeah.
Thank you.